Hello guys, today I'm going to share about this indicator called moving average. I'm pretty sure a lot of you have heard of this as well. And frankly speaking, up till today, I don't really use much of indicators. I use it quite a lot in my early trading days. And reason that I don't really use indicator now is because most of the indicators are actually lagging, right? Regardless of what indicator you are using, it has to wait until the price actually happened. Only they can tell you certain data. And now I'm more focusing to price action and volume itself, right? But regardless, I still think that as a beginner or as basic, moving average is one of the most powerful and easy to use indicators that I personally think. Right, so that's why I'm going to share this to you and how you can actually apply this to your trading and make things more easier for you. So what's moving average and what it actually tells you? Moving average is basically an average price of an asset over a certain period of time. Well, it's basically a math equation. You don't have to actually calculate it, but yeah, that system is already in it. And what they do is basically they calculate and then it visualize for you, then to let you see that over a certain period of time where the price is actually moving towards to. For example, right, you have 10 people here. You guys are walking up to the hill as a group. Some people walk fast, some people walk slow, some people go left and right, going sideways, but eventually the whole group as a whole is actually moving up towards the hill. So your price candles are these individual people that go fast, slow, sideways, or they just stagnant there for a while. And your moving average is actually the path of the crowd. You can't really focus on individuals where they are going, as that will actually complicate things a lot, but you can look at moving average to know that where they are going as a big group. And there's two types of moving average, simple and exponential. So what's the difference? Simple, basically every candles they hold the same weight, and for exponential, only the recent candles that actually matters. So which one is better? Well, personally, I would lean more towards to exponential, as the reason is because recent price matters more than the price that happened in the past. Yes, the price that happens in the past is also important, but picture this, right? Your rear view mirror is very important on your car, right? You can see what is happening behind, but you can't walk back. So same rule applies. All right, moving into the chart itself. First, let's go to set up our moving average. So how do we set up? Simply just click on the indicator here and just type moving average, right? And we get this moving average exponential. We click the first one and basically just add two lines in it. My settings for both EMA are 9 and 14. All right, how do you edit it? Just double click this and then you can go into inputs and there's length here, just change it to 14. And just for easy viewing, just change the other line to another color, right? So probably I'll just give it like a red, for example. All right, so you now have your red and blue line represents your moving average for 9 and 14, right? So there's a few ways that you can set your moving average period. There's 9 to 14, there's 10 to 20, or even 20 to 30, right? Each of them works fine. It just really depends on which one do you prefer. So why do I choose 9 and 14 is mainly because 9 and 14 they both move slightly faster, and then there's a bit more entry for you to search for, but also at the same time it comes with more fake signals. All right. So again, what you need to do is not just rely on a single indicator to tell you to enter for a buy or a sell. You also need to combine with other knowledges that you have learned before and to come out with a action. So how does this two line basically works? Whenever the price is above the moving averages and price is going up, right? And if on the other hand, when we see that candlesticks are moving constantly below my two moving averages, which means that price are essentially going down. All right, so that's just as simple as that on how to look at moving average. And there's two ways of trading moving average. Number one, you can always trade it whenever that the price is constantly below or above your moving average. And the second way to trade it is whenever there's a cross happening with the moving averages. For example, the line is crossing upwards or crossing downwards. And right here, I'm sharing to you my trading SOP with using moving average in different markets. All right, pay attention here. This is something that I can't get anywhere else. All right. Universal rule number one, identify the market type for now. Whether it's going uptrend, it's going downtrend, or it's going ranging, or we call it as sideways. In the uptrend market, then this will be your SOP. Number one, wait for your EMA to cross back up. And when it happens, do not enter immediately. Number two, wait for price to pull back to near to your moving average. And notice here, make sure that it doesn't break your moving average. Number three, once the price is rejected from your moving average, wait for a candlestick confirmation. And typically, what I like to use is engulfing candles. So in uptrend, what I want to see is a bullish engulfing candle. And number four, once all these three are aligned, just enter it without hesitant. Set your risk and reward ratio to 1 to 1. All right, so let's move back to our chart for a live example. Clearly, we can see that candlesticks are constantly above my moving average, right? It's going up. And the next thing I'm going to wait for retracement, right? I need to wait for another cross of EMA. And at this point, hasn't happened yet. So what we do, let's wait. Let it run, let it run, let it run. We were waiting for EMA to cross. It has crossed here, right? First one. Next, wait for price to retrace back to my EMA. It has retraced, didn't break. And third, wait for my candlestick confirmation. And the next candlestick, boom, wow, a huge bullish engulfing candle. And when I see this, let's immediately go for a buy. And let's just say that I entered immediately right after I see my confirmation. Set my stop loss slightly below, about 31 pips. Just give it 30 pips, right? 30 pips, and then my take profit is 30 pips as well. And let's see if we got the take profit. Let's run. Palm. All right, congratulations. We got our first take profit of the day. So what we do next? Let's just wait if we can find another entry point. Up to this point, EMA has crossed back up and my price is retracing back to my EMA. And now we need to wait and see if the price holds above the EMA. Let's see. No, the price did not hold above my EMA. And what we do now, let's wait again. We were going to wait for another cross of EMA, right? And it has just happened here. And I'm waiting for my price to retrace near to EMA. And it did. It did not break my EMA. And the next thing I'm going to look for is candlestick confirmation. And it doesn't happen here, it doesn't happen here, but it appears here. All right, this bullish engulfing is my confirmation. So let's just say I also enter right after my bullish engulfing candle. All right, I set my stop loss at my previous low. That's about 44, 45 pips. I also set my take profit somewhere around 44, 45 as well. All right, and then let it run. Boom. All right. Congratulations. Second take profit of the day. And now we move on to a downtrend scenario. And make sure that your candlesticks are constantly moving below your moving average. And second, wait for retracement. Wait for the next EMA to cross back down. Next is to wait for the price to retrace near to your EMA. And again, don't enter yet. Wait for confirmation. The next thing, wait for a confirmation candle. And in this case, we want to wait for a bearish engulfing. All right. And once all this checks out, enter a sell immediately without hesitant. Again, risk and reward 1 to 1. Here comes live example as well. Clearly, my candlesticks are constantly moving below moving average. So clearly it's a downtrend, right? Next thing, we wait for retracement and we wait for the next EMA to cross back down, right? And at this point, again, haven't happened yet. So let's wait. So at this point, we see that moving average has crossed back down again. Second, we want the candlestick to retrace back to my EMA. It has retraced, but I have not seen a confirmation candle yet. So I don't do anything. I wait for the candle. All right. So, boys, we have seen a bearish engulfing candlestick here. All right. Once we see this, immediately just go for a sell here. I drag my stop loss slightly above my previous high, and I also set my take profit 1 to 1, which is somewhere around here. All right, so once I set this and I just let it run and see if we've gotten anything. Oh, congratulations, we've gotten another take profit in our sell structure. All right, so once this is done, Again, let's just wait for another entry and see if there is. Our EMA has crossed back down again, and my price is currently moving back to my EMA. But looking at it, seems like it's gonna break, but let's see what happens. Price retrace back to my EMA. There's another candlestick straight away dropping down, right? This is a clear bearish candle, all right? So this is also my candlestick confirmation. So again, in this case, have I checked out all my lists? Number one, my EMA crossed back down. Yes, check. My candlesticks moving back to my EMA. Check. It didn't break. Check. My bearish confirmation candle. Check as well. So what I do, immediately enter sell here. And I drag my stop loss slightly above my previous high, about 53 pips. And I also drag my 53 pips here. Oh, congratulations. This is also a take profit. The last scenario, ranging market. To identify a ranging market, it has to be like the price is moving in between a certain range, right? If you haven't seen about support and resistance, you can just go back to my previous video and learn about support and resistance. It's tied to ranging market. Once I determine my range, basically determine my support and resistance level. Next is wait for price to reach to either my support or resistance level, and we call it as our point of interest. Wait for the EMA to cross back to the direction that you wanted. For example, you waited for the price to reach to your support level. What you want to wait for is to wait for the EMA to cross back up. And if you are waiting for the price to reach to your resistance level, once it reaches, you're going to want to see that moving average is crossing back down. And once you see the EMA has crosses, wait for candlestick confirmation again, either bearish or bullish depending on your at support or resistance. Once you see that, again, enter immediately without hesitant, risk and reward 1-to-1. And right here, we have our ranging market, right? So first thing, remember from my support and resistance class, drop a line in my resistance and my support, all right? So now I know that it's likely moving in between this range, all right? So let's just say that price haven't gone to this far. Okay, maybe it's somewhere around here. And why is it here? Is because 2 points, one line. Remember that? 1 point, 2 points, one line, 1 point, 2 points, and one line. All right, so here we are. Okay, what are we going to wait for here? Now price is near to my support level, right? Next thing, I'm going to wait for EMA crosses back up again. Okay, let's see if it crosses back up. Okay. All right. So at this point, ladies and gentlemen, price is about to cross back up. About, not yet. Don't rush. Wait. Okay. At this point, price crosses back up. Candlesticks retrace down to my EMA. Check as well. But I'm waiting for a candlestick confirmation. Has it happened yet? No, not yet. So let's wait. Oh, price goes back down. Thank God we waited for that. We didn't get our confirmation. We didn't enter. We skipped a stop loss. Okay. Now, EMA crosses back up again. It retraces back. Didn't break my EMA. It's still quite far off. And I'm looking for my confirmation. Do I have my confirmation? It's right here. All right. This candle is a bullish engulfing candle. Once I see this, let's just go for a buy. All right, I drop my stop loss somewhere here, about 70 pips. And I drag it to somewhere here at 73 pips as well. All right, and once we enter, just let it run. Oh, congratulations, first take profit. Now that price is at our resistance level. So what do we wait? We wait for EMA to cross back down again. Okay, let's see. Let's see if it crosses back down. All right, it crosses back down, but clearly we are kind of a bit late already, but no worries, it's still an example for you to see. So right here, price crosses back down, right? Okay, and next thing, we wait for price to move back to our moving average. It moves back, and then the third thing, I want a confirmation candle downwards. I waited, pump. Okay, there's a bearish engulfing candlestick happen here. All right, when this happens, let's just go for a sell. stop loss somewhere above our previous high, about 35 pips, and I also set it as 35 pips. Well, no brainer, we got another take profit, but clearly we are late a bit, but it's okay. Just take that as an example. Two take profits, one shot, it's good enough, right? It's really good enough. Just try not to chase for more. You might get more, or you might also lose back what you have gotten. Learn to protect your profits and your assets. That's the only way for you to go in the long run. And last, if you like my video, do like, share, and subscribe. And see you at the next video. There's a few links that in my profile that you can click on. There's my community, there's my partner broker, and so on. All right, see you soon.